Good morning. Welcome to Stock Market. Today it's Tuesday, September 1st, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at @DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today, where you can sign up for a free email to follow along with this show, as well as get daily stock ideas to consider that hits your inbox every trading day before the market opens. So U.S. equities were mixed in Monday's trading, with the S&P 500 finishing slightly lower, though the NASDAQ did post another record close. Stocks ended with another month of big gains for August. Value underperformed growth again. Treasuries were mixed with some curve steepening. Remember, the steepener has been the trade for the past couple of weeks. Dollar was better versus the yen, but weaker against the euro. Gold finished up 20 basis points. WTI crude settled down 80 basis points, reversing earlier gains. And as we get to the desk this morning, futures are up 30 basis points to start the new month. And this is essentially the final week of summer, folks, so enjoy it. Asian markets were mixed overnight, with Taiwan and China leading. European markets are mostly higher, though upside is somewhat capped. Treasuries are weaker, with the curve continuing to steepen. The dollar is softer on the major crosses, but off the worst levels of the morning. Gold is up 90 basis points. Remember, we've liked gold. WTI crude is up 1.1% as your inflation theme continues to play out in the commodity space. If we look at the structure of the S&P 500, right, so the winning streak ends at 6 for the S&P 500. We did get a new high, though, before we sold off a little bit later in the day. The Q's also new high. So 3,300 to 3,400 is support, 3,250 below that. We're above the rising 50-day moving average, above the rising 200-day moving average. We are trading at record highs, so there isn't any really price-based resistance with the market here at round number 3,500. Remember, round numbers are irrelevant, but people place value on them. There's no difference between 3,499, 3,500, and 3,501, but psychologically people seem to think so, so we get some stall outs at round numbers. You can actually see it here near 3,400. We are overbought in the near term based on the 13-period CCI and the 3-day moving average of that metric, and Chaikin money flow remains strongly bullish. So we're aware of the trends. We're aware of where the market is within those trends, overbought. We're aware of what is leadership, tech, discretionary, comm services. We're aware of the pitfalls in the market, breadth divergences, overly bullish sentiment, some weakening in the semis. That's your framework, folks. Bet accordingly. Strength and growth, underweight value, favor large over small. These trends are still in place. Manage risk, because we don't know if any of those worrisome data points that I just pointed out are going to rear their head and start to pan out. And if they do, you're not guessing at it. Your risk management process is in place ahead of time. You bought Tesla? Great. Where are you getting out? You should know that ahead of time. You bought Zoom in front of the print? Great. Where are you getting out? You should know that ahead of time. And more importantly, where are you moving your stops to today? Such that if the market does begin to roll over, you're getting out. You're making that decision ahead of time, so it's not emotional. I'm not saying this is the top. I have no idea. This trend could keep going. I can make the case for another 200 points in S&P upside from here. But I have no idea. I know what I own. I'm skewed towards the leadership, and I know where I'm out. You should do the same. Let's look at our market in a minute now. What are we writing today? Well, a record day for the Qs to close a big month of gains. NASDAQ, the Q is up over 10% in the month of August. New relative highs for tech as leaders lead. I know everybody was really hoping against hope for that rotation into value, but hopefully you didn't bite. Hopefully you didn't bite that worm. Bond proxies remains weak as rates back up. Online retail is oversold as it consolidates. We'll take a look at iBuy in my note today. We'll look at some of their holdings a little bit later on, though. Futures point to a higher open today. From an industry perspective, the Dow was down 87 basis points yesterday, 11-1 bulls to bears. S&P 500 down 40 bips, 167-54 bulls to bears there. NASDAQ bucks the trend, higher by close to 80 basis points, 34-5 bulls to bears on that continuous leader. Small caps Remember what we said, folks, growth over value, large over small. Small caps down 1.15%, 656 to 284 bulls to bears. Remember, and that's a relative trade. Bonds uptick, sending yields lower. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain bullish. Now, our stock of the day is stocks of the day. I kind of wanted to go through something here because I get a lot of questions about these thematic ETFs from time to time. I love thinking thematically. And you can own the group, right? But I'm often a fan of then drilling down and finding how can you leverage the bet even further. So iBuy is the Amplify online retail ETF, which we love. We've loved it for a long time. It's outperforming. It has a very bullish rating in our model. So owning that has been a great trade. Now it's consolidating here for the past couple of weeks, and it's actually oversold by our metrics. But what I wanted to do is then take it a step further and say, well, what are the stocks that have bullish ratings and neutral ratings and bearish ratings? So I was able to load our holdings for the stocks that are U.S. listed. I was able to load them into Chaikin Analytics, and here's what it looks like. Of those, we have 19 bulls, 21 neutral, 1 bear. We had 3 stocks trigger buy signals today. Overstock, Wayfair, and Amazon are the 3 names that triggered buy signals. And you can see here the names that are bullish. Names like Alibaba, 1-800-Flowers, Amazon, eBay, right? Overstock, PayPal. So this is a good way to take a theme and then figure out how to leverage that theme further. You could take, if you're interested in blockchain technology, you can take the BLOK ETF and load the holdings into Chaikin Analytics and see which stocks are bullish, right? And you can do that for a lot of these thematic ETFs, and it's really a fun way to see what's driving the leadership in these themes, whether the theme is emerging or already in place. So take a look at that. Let's look at our sector tracker now. Movement of the major sectors over the last 5 days. Tech, comms, healthcare, top 3. Discretionary, staples, real estate, and fins are middle of the road. Materials, industrials, utilities, and energy. So we have our bond proxies at the bottom of the list as rates have backed up, right? So that's kind of weighing on REITs and utilities. Energy, just an utter disgrace from a relative standpoint. Same with the financials. Now, our 2 cyclical areas that we've liked, materials and industrials, are actually showing signs of near-term weakness on a relative basis. We talk about it in note today, something to be aware of, something I'll be watching, right? These were emerging shifts that we were paying attention to and starting to get behind a little bit. I still like the trends, but recognize that they are under a little bit of near-term pressure. So should that pressure continue, well, we'll just change our views, right? We're not dogmatic here. When the facts change, we change our mind, and so should you. Our industry in focus, capital market services, and this is kind of one I want to get behind because I'm seeing interesting names in the group, but the group itself is not there yet. But you can see it here over the past 6 months. It's lagged the S&P by about 2.5%. Power bar ratio really strong, 26-4 bulls to bears, currently ranked in the top third, number 7 of 21 subsectors. It has moved down 4 slots over the past week, but some interesting names there: Evercore, EVR, Federated Hermes, FHI, and Cowen, COWN, all with very bullish ratings as holdings of ticker symbol KCE, which we'll take a look at here. Now, the fund itself is neutral. Trend is strong above the rising long-term trend line. Notice that we haven't taken out the February highs yet, and money flow is really punk here in the near term. It is an underperformer, as I said. So there are signs of improvement here, but there's also enough that you have to say to yourself, this isn't a compelling big picture theme, right? It's part of a weak group, financials. Now, financials are broad, so you can diversify out the view a little bit. And remember, financials are a lot more than just the banks. Insurance is in there, cap market services, things like that are in there as well. Credit cards, right? Consumer finance. But this group is just not there yet. I want it to be there. I see some really interesting names, but the group itself is not there. So again, the market doesn't care what I want. It doesn't care what you want. Market cares only about hurting the greatest number of people at any given time. So always kind of keep that in mind. But let's dive into what's trending now. And We're going to run through this one quickly. Alexion up 6.75%, part of the interesting group of bigger picture biotechs that have been doing better of late. AMD, semiconductor stock. Remember what I said about the semis? They've been under pressure, but AMD had a nice day yesterday, up 6%. Juniper, 4.75%. JNPR to the good. WST has been a market leader, quite honestly. I can't tell you how many times this WST has showed up on my radar screen and I haven't pulled the trigger, and I'm kind of kicking myself for it. It's been an absolute monster. Sometimes we miss them. I got to be perfectly honest. Up until a couple days ago, my portfolio was full up. I just didn't have any room. And I just missed the opportunities, and that's unfortunate because the stock is there. It's been a great trade, and I've missed it. So hopefully none of you have, or some of you have gotten to ride that wave. And TAP following through 3.6% to the good on the day yesterday. Loser side of the board. So some energy in there, some reopening trades in there. Kind of interesting. Holly Frontier, HFC, energy company down 7.5%. You know my views on energy. MGM is actually a compelling name within the reopening basket. It does have a bullish rating here at Chaikin Analytics, and that's kind of interesting to me because the group has been a bit of a disaster, right? And MGM's kind of interesting to me. It's a personality change, actually. MGM starting to outperform and is beginning to and has just turned bullish. So that's kind of an interesting dynamic that I think makes sense to pay attention to. Take a look at MGM. PSX energy stock down 5.75%. IVZ, one of the asset managers, down 5%. WIN, WYNN, down 4.5%. I guess the reopening trades were punk yesterday. Let's take a look at relative trends, and I'm being a little funny here by saying presented with no annotation because sometimes the chart just speaks for itself, doesn't it? And this is XLK, this is tech relative to the S&P 500, and without overthinking it, without getting caught up in the rotation trade, just kind of looking at the trend, right? And using two simple moving averages, the 50-day in red, the 200-day in blue, and momentum, the RSI at the bottom, right? Just taking a step back. There was no way during that whole it's a rotation, the growth trade is over argument. There was actually nothing that should have made you deviate from having tech as an overweight. Right? We stuck with it. We kept saying this is just a pause within a consolidation, pounding the table. The ratio barely broke the 50-day moving average, barely broke it, and is now at all-time highs. Momentum never broke down. The RSI stayed in bullish ranges. So it's easy to get caught up in the day-to-day, but sometimes it makes sense to just take a step back. Comm services, on the other hand, has been a tough one. I mean, it's grinding higher, but it's trying your patience. You can see XLC relative to SPY, but again, just kind of take a step back. It was just a consolidation. It was just a consolidation, and now it's grinding topside, all while the RSI is putting in a series of higher highs and shifting to bullish ranges. Okay, so if you were long Facebook and Netflix and Google and EA and Take-Two and the big leaders in this group that you've heard me talk about, and you all of a sudden got in your head, well, there's this shift to value, I'm going to sell my stocks. Silly. Those stocks probably never broke your risk profile or your risk parameters unless you're a really short-term trader. So silly. Just focus on the bigger picture trends. And then finally, the opposite side. What happens when rates break back up? Bond proxies go down on a relative basis. But what's interesting is this trend has been in place for months. It's not new. So that's going to wrap us up. Take us for a test drive. I'm back with you tomorrow.